Are you seeking private financing for a commercial property deal and want to know how much leverage you can get? In this video, I'll provide the typical maximum loan-to-value for various deal types, including acquisition bridge loans, refinance bridge loans, rehab value-add projects, and ground-up construction. I'll also show you how to find direct lenders that offer short-term bridge loans for commercial real estate nationwide. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. The maximum leverage can vary widely based on the asset class, the loan type, the property's location, and the market conditions at the time of funding. This video was produced in January 2022 in a strong real estate market with record low interest rates. Now let's get started with refinance bridge loans. The maximum LTV is 75% for industrial, multifamily, and mixed-use properties which are majority multifamily. It may be possible to go that high for office, retail, and storage properties, but most lenders max out at 70% for these asset classes. For non-core assets such as hotels, healthcare, assisted living, and others, the maximum is 65% LTV. There are some exceptions to these numbers. For example, bridge lenders that are very comfortable with hotels may lend up to 70% LTV for a refinance bridge loan. Some lenders max out at 65% LTV for all asset classes and loan types. There are also a few bridge lenders that consider vacant land as collateral, and the maximum LTV for land is typically 50% of the as-is value. If the land is not entitled, the maximum may be 30 to 40%. If you really need to get higher leverage for your deal, a small number of bridge lenders provide mezzanine financing and second lien position behind another lender, and the maximum combined LTV may be as high as 85%. Mezz financing is not commonly offered for a refinance. It's more popular in acquisitions. One final thing to note about refinance bridge loans: if the loan request includes any cash out funds, many lenders become more conservative and reduce their maximum LTV by at least 5%. Next, let's move on to acquisition bridge loans. For a stabilized commercial property with no major rehab or value-add component, the maximum leverage is typically the same as for refinance bridge loans: 75% LTV for industrial, multifamily, and mixed use, 70% LTV for office, retail, and self-storage, 65% LTV for other improved properties, and 50% LTV for land. When I talk about LTV in purchase bridge loans, I prefer to use the term loan to purchase price, just to be clear that the price is the value. If you feel the value is much higher than the purchase price, it likely won't affect the maximum leverage. You'll still need to contribute a significant amount of equity to the deal in the form of cash or equity in another investment property. When an acquisition bridge loan is for a value-add project, the loan-to-purchase price is typically higher for multifamily, but not so much for other asset classes. I know a number of bridge lenders that fund up to 85% of the purchase price for a multifamily property plus 100% of the renovation budget, so long as the loan amount does not exceed 75% of the completed value. You'll find a similar structure with other asset classes, but with slightly lower leverage. Some bridge lenders max out the renovation budget at the same number as their loan-to-purchase price. For example, 75% of the purchase price and 75% of the renovation budget. So the sponsor would have to contribute 25% of the total project costs in cash. It may be possible to get mezzanine financing to increase the leverage. As I said earlier, the maximum combined LTV for mezzanine financing is 85%, and there are a number of creative ways to structure deals with a mezz loan. I'll make a separate video to provide more details about mezzanine financing in the near future. The maximum leverage for ground-up construction projects is much more conservative. Most lenders max out at 75% of the construction cost. Even if the land is owned free and clear and has lots of equity, the developer typically still needs to contribute at least 25% cash to the deal and also maintain cash reserves in case the project goes over budget. The majority of private lending firms that offer construction financing will only consider funding the vertical once the project is shovel-ready. However, there are some lenders that will fund the horizontal land development or even the land acquisition along with the construction financing. In these cases, most lenders max out at 50% LTV for the land, so the developer's down payment would be 50%. I know a few lenders offering up to 65% of the land acquisition, but only if the project is entitled and close to being shovel-ready. When the real estate market begins to slow down and values fall, lenders typically reduce their maximum loan-to-value by 5 to 15% just until values stabilize. If and when there's a significant change in the maximum leverage ratios, I'll make another video to keep you updated. One thing that can be frustrating when you're researching lenders online is many of them don't break down their maximum leverage by deal type or property type. For example, a lender may state the maximum LTV is 80%, but that may only apply to the acquisition for a value-add project and not for a standard bridge loan, a purchase, or a refinance. Some lenders do this with a goal of getting many brokers and investors to inquire so they can grow their database. If you're seeking a bridge loan for a commercial real estate deal, use our website, privatelenderlink.com, as a resource. There's no fee to search, and all lenders have a detailed profile indicating their maximum leverage for various loan types and asset classes. From the homepage or any other page on the site, click Browse Lenders. Select the loan type, then enter a state or metro area to see a list of lenders. Look through their profiles to learn about their guidelines, rates, fees, and much more. Click the green contact button to find their phone number, an email form, and a link to their website. We also have a great system to make your search for lenders more efficient. Click Create a Loan Request to enter your deal information. Save it, then invite select lenders to view it, and they can message you directly through our platform. If you'd like some assistance with your lender search, you can click a button to request recommendations from us. We'll review the deal and invite a few select lenders, some of which may not have a public profile on the site. If you found the content of this video to be useful, please click the like button and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.